Over the past 6 months or so, there are only 2 different stocks that are new positions in my personal portfolio, and one of those stocks is Waste Management, stock ticker WM, currently trading at $211.77. If we jump over to my do-it-yourself investor toolkit, which you can download on tickerdata.com, and zoom in and come over here and look at this growth chart, we can see Waste Management is a position I'm currently up around 36% on. Now, if we jump back over to Seeking Alpha and look at the past year, we can see they're up around 39.24%, and over the past 6 months, up around 34.75%. So this company has been on a pretty good run over the past half year. So in this video, we have a lot to touch on. We're going to be jumping into some recent news, looking at the company's dividend data, looking at their investors presentation, and of course, seeing if we can find the intrinsic value of this company. And like always, if you'd like to be able to download any of my spreadsheets and also get access to the Ticker Data add-on in Google Sheets, then you can head over to tickerdata.com at the link in the description. So let's go ahead and jump into it. Now, the first bit of news that we need to touch on is Waste Management recently increased their dividend by around 7%, bumping it up to around 75 cents per share. So let's go ahead and start digging into those dividend metrics. We'll jump over to the spreadsheet and plug in WM and hit enter. And you can see all this data will go ahead and load in. Now, right off the bat, we can see this company has a low starting dividend yield sitting at about 1.42%. And we'll come back and touch on this just a little bit more later. But we can see payout ratio for the trailing 12 months sitting at about 49.31% and free cash flow payout ratio sitting at about 62.28%. Now, if we look at the yearly dividends over the past decade, the company has done a good job of growing those dividends. It looks like in 2013, they paid out around $1.46. And in 2023, it jumped up to $2.80. And after their most recent dividend hike, they're now paying out $3 per share every single year in dividends. And if we look at those dividend growth rates on a 10 and 5-year basis, it's been pretty solid. 10-year around 7.18% and 5-year at around 7.91%. Now, if we look at the free cash flow growth rate, you'll notice it's a little bit lower. We have a 10-year free cash flow CAGR of around 4.42%. So this is a more mature company. Free cash flow growth isn't quite as fast. In the 5-year, there was a slight decrease, but really that's because 2018 was a pretty solid year of free cash flow for them, and 2023 was slightly lower than those numbers. Overall, I still think they are trending in the right direction. Now, if we look at the free cash flow payout ratio over time, we can see for the most part, it's been in the range of around 40 to 60%, but in 2023, it jumped up a little bit higher to around 62.28%, which brings me to something that I want to talk about, and that is the company's capital allocation plan. How does this company plan on rewarding their shareholders? Now, clearly, Waste Management has a commitment to increasing their dividend payments every single year. And if we look at the dividends right here, we can see management is telling us they are targeting a 40 to 50% payout of free cash flow. If they can stay in that range, then I feel like that is a pretty healthy dividend. Something we need to understand about Waste Management is that this is a company investors consider safe, reliable, and very predictable. And those things are typically something investors are willing to pay a premium for, which we'll talk about later in the video. Now, we can also see the company is focused on buying back shares. They recently had a 1.5 billion share buyback authorization. So if we jump back over to Seeking Alpha, if we jump on financials, click on balance sheet and scroll down, let's look for shares outstanding. We come down here to the bottom right here, we can see total common shares outstanding, and we can see this charted out. And over the past decade, we can see a gradual decline in the total amount of shares outstanding for this company, basically meaning they are buying back shares, giving more ownership of the stock to their shareholders. So this is definitely something we like to see. We can see they're also focused on reinvesting back into the business. Their long-term target range to support the business is 9.5 to 10.5% of their sales. And also in the past 5 years, they have used $5.5 billion on mergers and acquisitions. So they are exploring other growth avenues. Now, if we jump back over to our dividend sheet again, free cash flow payout ratio needs to come down just a little bit to get into the range that they wanted at. Now, when we think about Waste Management, we think this is a very simple and boring stock. This is basically a trash stock. And for the most part, that is true, but there is quite a bit more going on with this company than most realize at this time. This company is currently embracing automation and data analytics become even more efficient. And there's 3 examples I wrote about on Seeking Alpha right here. 1, they're exploring the idea of autonomous trucks, which could potentially reduce cost and improve safety. They're looking at smart containers, basically deploying sensors that optimize collection routes and predict waste volume. And then, of course, they're utilizing data to personalize customer service, identify cost-saving opportunities, and optimize pricing strategies. And so all 3 of those focuses are something that have investors excited about this stock. And if we look at the profitability of this stock, we're looking at this profitability sheet, look at the gross profit ratio. It's been very steady over the past decade, but it's actually seen some slight increases. We can see the 10-year average gross profit ratio at around 37.4, and over the past year it was around 38.28%. So again, for more mature companies, increasing their gross profit ratios, definitely a way that they can see increased profitability. And so with a focus on these 3 things, I think we could see increases in the gross profit ratios. Now, that being said, Waste Management does have some potential problems that could be detrimental to the company in the future. For example, I was reading this company's Form 10-K the other day. It's 163 pages long. There's a lot to get through, but I jotted down a few potential risks from the company after overviewing this form. And in my opinion, these are the three main risks. Waste Management may be unsuccessful in implementing their new technology leads. So obviously they are investing high amounts of money into this project, but it may not pay off long term. And then two, we have their acquisitions. And like I mentioned earlier, this company has seen $5.5 billion invested in mergers and acquisitions over the past 5 years. And so one potential risk is these acquisitions may not pay off in the anticipated timeframe for Waste Management. And then of course, finally, we have disruptions or delays in the supply chain may adversely affect the schedule for implementing their proposed expansion of recycling and renewable energy ventures for this company. So that was a lot of information we just touched on this stock, and the reality is it's pretty much trading at all-time highs, currently at $213 per share. If we look at the past 5 years, we can see it's up over 107%. And so the question we need to be asking ourselves as of right now is Waste Management trading at a good value at $211.77? To answer that question, let's go ahead and jump into my stock valuation spreadsheet, and you can see I just plugged in the stock ticker WM and all this data loaded in. Now the first valuation we're going to be looking at is our discounted cash flow analysis, and I'll go ahead and zoom in, but basically the idea behind this valuation model is we value the company based on how much free cash flow they're going to produce in the future. Now we need to project a growth rate to the future free cash flows for the company, and fortunately for us, management recently released some free cash flow guidance for 2024 in a recent report. If we come down here, we can see they stated free cash flow is projected to be between 190 and 2.05 billion, including the sustainability growth investments. So they kind of give us an idea of next year's free cash flow. And so you can see based off this guidance, I'm going with a free cash flow growth rate of around 12%, which puts them at their expectations for 2024. After adding the company's cash and cash equivalents, subtracting out total debt, and dividing by shares outstanding, we come to a discounted cash flow price per share of $117.73, which is actually quite a bit below the current trading price for this company. Now the next valuation we'll look at is going to be our multiples valuation, and basically what we're doing is we're looking at how the market is valuing companies that are similar in structure by taking their stock price, dividing by earnings per share to find their price to earnings multiple. Now all of these companies, including Waste Management, trade at pretty high price to earnings multiples. The average is pretty much 39.8. I mean, that is a very high price to earnings multiple. These are expensive companies, no doubt. But if we take that average PE and multiply it by Waste Management's earnings per share, we come to an intrinsic value of $226.71. Now finally, if we jump over to our dividend discount model, we value the company based on how much they pay out in dividends and how much those dividend payments are growing over time. And basically, I'm going with a dividend growth rate of around 6.5%. Now keep in mind that is a little bit lower than we've seen over the past 10 and 5 years, but that is still a pretty solid dividend growth rate for a mature company overall. So with a discount rate of 8%, we come to a dividend discount model price per share of $213. So when we jump over to our output tab, we can see the three valuations that we use in this scenario: DCF at 117, DDM 213, and multiples at 226. Average all three of those together, and we come to an intrinsic value of $185.81. So at its current trading price of around $212, it looks like it's overvalued by around 14%. And with a 10% margin of safety, you could see the acceptable buy price sitting at 167 and 20% around 148. Now, I originally added this company to my portfolio when it's trading in the low 150s, and at the time I felt like it was trading at a great value, especially for a company that I believe deserved to trade at a premium, like I said, due to the reliability, the predictability, and the stability of the company's revenue and the dividend payments. But it's pretty clear over the past 6 months or so, Waste Management has left undervalued territory and is now trading at a bit of a premium and appears to maybe be slightly overvalued. There's definitely a lot I like about this company, especially if you go through their investors presentation, you'll see what I mean. For example, we can see 75% of their revenue has annuity-like characteristics. That's obviously something that I love as an investor in this company. But overall, for me, it's hard to justify the price at its current prices. Again, investors are willing to pay for predictability and stability, and I completely understand why, but with a low starting dividend yield and the dividend growth rates being in a decent position at around 6 or 7%, I personally feel like I could find better opportunities in the market, with Waste Management currently being a little bit overvalued. Now, to be perfectly clear, I definitely don't plan on selling out of my position in Waste Management. I'm very happy to hold my shares, but I'm just not adding more at current prices. But go ahead in the comments down below and let me know what you think of this company. If you'd like to download any of my spreadsheets and also get access to the Ticker Data add-on in Google Sheets, then you can head over to tickerdata.com at the link in the description. But with all that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.